price is what you pay, value is what you get.
I like
the
that.
market often confuses the two. This means that great companies at times go very unloved
Yeah.
and alpha opportunity for patient investors like us.
Good morning, viewers, and welcome to episode 2, season 3. I'm delighted to be here with my wonderful colleague and our head of our Asia Value Investing team, Sundeep Bihani. Sundeep, great to have you on the show. Sundeep, let me start firstly by talking about value investing in Asia. Generally, the perception across investors is Asia is all about rising consumerism, middle class, robust, technology, and so forth. Does the case for value investing work for Asia? Let's start by busting that myth first.
Absolutely, Salman. Value investing works beautifully in Asia, just like any other place. What is value investing? It's about buying good, durable businesses when they go into a tough time and the share prices fall in a free fall and are on a temporary sale. It happens in Asia too because human emotions and behavioral biases, just like anywhere else, are also seen in Asia.
Yeah.
Asia is very heterogeneous, different stages of the economic cycle, significant regulatory and policy influences, and a growing investor base. And all this means that Asia is also prone to the same biases which we have seen in the rest of the world. The key thing is that price is what you pay, value is what you get.
I like
the
that.
market often confuses the two. This means that great companies at times go very unloved
Yeah.
and alpha opportunity for patient investors like us.
Okay, that's fantastic. I love what you said. Price is what you pay, value is what you get. Just on that point, why do you think the take-up by investors in Asia, you talked about behavioral bias and stuff, which is very, very important. Let's dive into that a little bit, Sundeep. Why is value investing not picking up as much as it should in Asia as we see in developed markets?
So, value investing by its nature is very uncomfortable.
Yeah.
It's psychologically discomforting
Right.
to be buying stocks at that point in the cycle where there is weak sentiment, poor news flow, and no catalyst or visibility in the near term.
Correct.
And that means that people will shun away from this area.
Yes.
In the US, there is 100 years of value investing
Right.
experiences. A lot of capital has been put in place. Very famous investors written classics around value
Correct.
investing.
Yes.
I think in Asia also it will take up as
Right.
the markets become more sophisticated.
Correct. Correct.
But the thing is, Salman, I'm not complaining.
Yeah.
Because when you want to buy good companies at very cheap prices, you
Yes.
don't want to get in a queue and bid with someone else.
Yes.
You want to be contrarian.
Correct.
And that to me allows us to buy good stocks and get great alpha
Right.
over a 2 to 3 year time frame. If you see that our portfolios are very, very different to that of our peers.
Yes.
And that means that also the correlation of our portfolios to the rest of the market is also very little.
Right.
That allows us to position.
Agree. And I think that portfolio positioning is key to what you're saying. So that was about value investing. Let's talk a little bit, Sundeep, about you and your team. The first one is, what is the investment edge? You've touched on it a little bit in the previous answer. Your investment edge and the repeatability of that over the next 5-10 years. Tell us a little bit about that case.
Great question, Salman. And that's where we spend a lot of time.
Right.
So our investment philosophy is premised on the observation that human emotions and biases lead to investment pricing distortion.
Yeah.
And therefore, we have built a very sophisticated process around identifying these behavioral biases
Right.
and identifying the companies which are suffering as a result.
Yeah.
We only look at the beaten down part of the market because
Correct.
that's where we see the uncrowded opportunities.
Yes.
What do we do? Secondly is to identify what is it really worth.
Correct.
And is it cheap for reasons which will disappear over the next 2 to 3 years.
Right.
So cheapness is not the reason we buy.
Yes.
Cheapness is the reason we investigate the business.
Correct.
And then we come up with fundamental long-term value. What if this company did not have the fears it is having today? The thing is, in value investing, you get upside from two areas. One is when the value multiple goes from trough to the other side of the pendulum, which is reflecting greed and very popularity, the multiples will be very high.
Yes.
Second is the earnings growth of the company goes from trough earnings to normal and often overshoots it.
Yes.
So there are two ways to capture this upside, and that's why value investing leads to multi-baggers.
Got it. Understood. And just on that note, and just extending that, Sundeep, your team and the way you manage is more a concentrated portfolio approach rather than just going big bang. Just a little bit about why concentrated portfolios and why do you believe in that investment thesis and follow it and have seen results as well?
Salman, the multi-baggers don't come all the time.
Yeah.
So when they come, we better show all the love to them.
Yes.
We better ensure that they matter into the portfolios.
Right.
And that is why I think the concentrated investing is the way to go.
Right.
Particularly in value investing, because we hold stocks for 2 to 3 years, we don't have to look at a lot of stocks. We don't have to go in and out.
Yes.
And therefore, we can spend our time on those very few, the strongest opportunities.
Correct.
And in fact, I would argue that contrarianism leads to lower risk because we are spending a lot more time on understanding our own businesses.
Correct.
As some of the famous investors in the US say, you don't swing all the time.
Yes. For every single pitch, yes.
Yeah, you only hit the fat pitches.
There you go. I love that.
And that is why I think that concentrated investing allows you to go there.
Correct. So Sundeep, look, great passion for the subject and kind of how you're practicing it as well. Let's wrap up by asking about what's a key takeaway for investors around value investing in Asia?
Well, we strongly believe that value investing portfolio should be a core element in each asset allocator's portfolio. First of all, in terms of the strategic shifts going on around interest rates, inflation, the geopolitical fragmentation, the multiple supply chains, the AI impact on software, intangible industry, all this means that value investing should have a very good time over the next 3 to 5 to 10 years.
Excellent.
What's also important is that in Asia, over the last few years, what you've seen that most of the funds in the space are around core and growthy. As a consequence, the indices and the ETFs also are quite correlated.
Right.
And therefore, you get the same risk reward from all these different vehicles.
Yes.
By having a value fund, you are breaking this correlation while capturing the reward from the contrarian value stocks in the universe.
Got it. Wonderful. Makes a lot of sense. Sundeep, on a warm Singapore morning, thank you so much for being here. Really appreciate it. It's a great strategy. We're seeing results come through it. Hopefully investors will find it very, very valuable. Great to have you on the show.
A pleasure.
Thanks, Sundeep.
Thank you so much for having me.
Thank you.